This candle right here cost me $4,200 in a single morning. And the worst part? I knew exactly what I was doing. I thought I was trading a breakout. I thought I was reading momentum correctly. I was dead wrong. Stick with me for the next 5 minutes because I'm going to show you exactly what was actually happening on this chart. And then we're going to trade this setup live, together with zero hindsight. There's a move that happens almost every single trading day during the first 15 minutes of the session. Most retail traders get absolutely obliterated by it. And once I show you what's actually going on behind it, you'll never look at a candle the same way again. But first, I need to show you what the market is actually doing to you during the open, and I promise it's going to make you angry. The market open is not random, it's emotional. Everybody reacting at once. Panic buying, panic selling. And because of that, the first 15-minute candle tells us almost everything. So here's what we do. On the 15-minute chart, we mark the high, we mark the low. We box in what's called the opening range. That's it. No complicated indicators, no 14-step system. Now watch what happens when price breaks aggressively outside this box. Here's what they don't tell you. Institutions don't trade like you and me. They need the other side of the trade. They need liquidity. And the only way they get it? They create a move so convincing that retail traders pile in. Aggressive breakout candle above resistance. Breakout traders see it. FOMO kicks in. They enter. And then, boom, complete reversal. Stops wiped. That candle was bait. Same thing on the downside. Huge panic sell-off into support. Emotional shorts pile in. Violent reversal right back up. They needed you to enter, so they gave you a reason to. So how do we actually trade this without getting trapped ourselves? Here's the entry, and pay close attention because this is the part most traders skip. Once that first 15-minute candle closes, we drop down to a lower time frame. I personally use the 5-minute chart to look for the actual entry. When price aggressively sells into support and suddenly prints a massive rejection wick, that tells you somebody big stepped in. Buyers absorbed the move. The rejection is real. We call this the John Wick candle. But here's the thing, we do not enter on the wick itself. We wait for the candle to fully close. Then, if the very next 5-minute candle breaks above that wick high, that's our entry. Stop below the wick low. Clean structure, defined risk. Reverse it for shorts. Aggressive rally into resistance, massive upper wick rejection. Next 5-minute candle confirms lower, short entry. Now, sometimes the reversal doesn't happen slowly like this. Sometimes it snaps back so hard it looks almost violent. That's something else entirely, and I'll show you that in a second. That's the power tower. When the reversal is so aggressive it almost feels wrong to enter against it. That's usually the best entry of the day. Why? Because the more emotional the initial move was, the more trapped traders are on the wrong side. And trapped traders fuel the reversal. Most people see aggression and assume continuation. Experienced traders see aggression near key levels and start getting ready to fade it. Here's one more thing before we go live, and this alone saved me from dozens of bad trades. Before taking the trade, go back up to the daily chart and pull up the ATR. If the opening move already consumed 20% or more of the average daily range, we have a manipulation candle. Too emotional, too fast. Then we go back down to the 5-minute chart and wait for the entry confirmation. The market almost always needs to breathe after that, and that's where our setups live. All right, this is the moment. Everything we just covered, 15-minute opening range candle prints. We draw a box around the high and low of that first candle. Then we drop down to the 5-minute time frame and wait patiently. Price immediately goes back up. Right there, we get the power of tower candle printing at support. That's our signal that sellers are losing control. So we enter long. Stop loss goes below the wick. Now watch what happens next. Now here's what I want you to do tomorrow morning. Open your chart at 9:30. Draw that opening range box. Don't enter a single trade for the first 15 minutes. Just watch. Tell me in the comments what you see, because I guarantee once you know what to look for, you're going to see it everywhere. I put together a second video showing exactly how I set my stops and size my positions on these setups. If you want that, it's right there.